Hello, everybody. It's Sunday. It's showtime. Thank you all for coming. Hope everybody's doing well. Let's get into the story. The story is, again, another weird compilation of questions. Let me know if the sound is okay, but I'll try to do my best to answer them as always. And these questions are always fantastic. And the reason I go through this exercise every week is not just to address people's top issues, but it also helps me sharpen my skills and get smarter too. Let's get into it. This is called Powering Future Moves. We're going to touch on a whole bunch of stuff: crypto proxies, Ethereum. For the Ethereum bag holders, how high can we go based on the models? We'll answer that too. And energy, AI, and how can you position not only yourself, but your kids for future success? Let's get into it. And not financial advice, of course. And a big shout out to all the investing dads out there. Happy Father's Day in the United States, and to all the fathers on the planet. We don't care what country you come from, but you are all trying to provide for your families, whoever your families are. Your family might be a cat or a dog or other family members or your whole family yourself. I don't know. Well, congratulations. Let's get into the story. All the questions come from Patreon. First question is from Evo. Some IA people are still holding a bag of ETH, likely waiting for a major move. Do you have any projections for ETH this run? Yes, I'm going to show ETH some love, everybody. I'm an equal opportunity, share the goodness with every asset. And of course, people can choose whatever they like to invest in. And we are very supportive of that too, as long as, of course, they're winning assets. But let's look at a couple of things. This is Ethereum on both the LILO model and the ATR model. Now, there's a couple of things you can pick up from this. Is first of all, where ETH is now versus where it's come from in the past. You can see here the levels up to level 6 goes back to the previous all-time high, which is just shy of $5,000. Current price right now is about $2,500. It's halfway away from all-time highs, which happened back in 2021. Time flies when you're having fun, huh? The red shadow, as always, is the bear market. And the bear market on the ATR model identifies bear markets for equity and crypto, and they are not the same, okay? And then on the right, that kind of shadow box is the LILO model, projecting exactly how high we could go. Now, a couple of things you can see from this. This model identifies tops and bottoms and when to buy. Right now, things are looking pretty bullish for Ethereum. It has a buy flag. That's good. Trend is about to flip up, positive. And we are currently level 1, 2, 3. We're level 3 for Ethereum. So again, approximately halfway from all-time high. But what I'm trying to do is answer the question based on the models. Now, what we can do is look, I'm going to turn off my little camera for this one. Actually, I'm going to put myself top left-hand side. Using the models and ballpark percentages of how high we could go. And I hope people are very satisfied with this. But basically, this is how these things work. And some people say, no, Ethereum is going to 80,000 because I read it on a paper yesterday. Yeah, based on my models and predictions and weightings, how high Ethereum could go this bull run, which could end this October 2025. And remember, don't forget, everybody, when the bull market ends, that is quite possibly the worst time to leave crypto. Billions are made in the bear. Approximately 6 to 9 months after the top of the bull is the best time to be investing. Remember that, I'll hammer that home one more time. So looking at the models, there's about a 35% chance Ethereum goes to 34.22. About a 30% chance we get back to 4,000. 25% chance about 4,400. 20% chance we hit 48.38. Remember, the higher we go, the thinner the air gets. 15% chance of 5,310, which is a new all-time high. 10% chance of 5,910. Coincidentally, 10 twice. It's the model, it's not me. And then a 5% chance of about 6,250. Now, it doesn't mean that 6,250 won't happen, or even 8,000. But they are the weightings that I would give this asset. So if the price is currently 2,500 and you're going to 6,250, that's a pretty good return. Not bad at all. But again, remember, there's 1,000 other players out there chopping at the heels, sucking again the oxygen from the room. Remember, there's only so much money, only so much cheddar to go around. Not that I eat cheese, but remember, the more things nipping at the heels of this player, the less money it has to go up. Now, just to put things in perspective as well, Metcalfe's law. This is so important. I'm a massive believer in Metcalfe's law, unless you're talking about store of value. And way back in the day in 2021, they were calling Bitcoin digital gold, and Ethereum was called digital oil. Is it now? I don't know. Metcalfe's law, the value of the whole network increases the more users have it. The problem we have, though, there is not a lot of users on Ethereum right now. And the chain I find personally very unusable. It's very difficult to use. And I know how to use blockchains. I can't wait 10 minutes for confirmation of something. It's just that's what we did 5 years ago, not today. And also just to highlight one Solana deep in player, which is decentralized physical infrastructure, Helium, has 1.1 million daily users. Okay. And Solana News here says that's more than most chains have real users. Well, the little deep in Helium play on Solana has 3 times the number of users that Ethereum has. Again, one little dApp, bonkers. And 62 times the number of daily active users on Cardano, one dApp. Okay. That drives the value of chains. That's why I'm very worried about Ethereum. That's why I unloaded it many years ago. And that's why I went in on this chain where all the users are. Yeah, I know Solana price sucks. Yeah, but so does Ethereum. But what's done better since the bear? The answer is Solana. Anyway, I hope that helps. We'll revise those questions again or revisit those. Again, there's a 5% chance we hit 6,250. There could be a 1% chance we go to 8,000, 10,000, but that would require a huge surge in the crypto market cap. We're talking to 3x. For us to hit, say, a $7,500 Ethereum, that means Bitcoin would have to probably hit north of 300,000. Okay. Is that going to happen? Very unlikely. If it does happen, I'll be here partying with you all as much as the next person. I want all things to succeed. If ETH goes high to 6,250, that is great for us and the crypto market cap and the dominant chains in the crypto market cap. So, hope you like that answer. Next question is from Christopher K. Do you think it'd be okay to hold Bitcoin in Fidelity and or Robinhood? I don't trust myself with a cold wallet. Well, I assume, let's just talk about Fidelity because Fidelity is really the key player. You know, I use Robinhood for trading. I wouldn't park all my funds there at all by no stretch, but I have absolute trust in Fidelity. And I assume you're talking about the Bitcoin ETF rather than choosing cold storage. You want to choose a Bitcoin ETF. FBTC is the Fidelity Bitcoin ETF. And I believe of all the ETFs, they are definitely the most trusted. Okay. They have over 80 years of financial experience, have never betrayed anybody, manage over 4 trillion in assets. Okay. They focus absolute integrity and supporting customers. They also have in-house regulated custody, which is very rare for these Bitcoin ETFs. And they've been playing with Bitcoin and Bitcoin mining since 2014. They were super early into this game. So yes, you can absolutely trust Fidelity Bitcoin ETF. And if you need to park some money in the FBTC on Robinhood, that's fine too. You could also buy Bitcoin on Robinhood as well. And I'm sure that's fine, but I wouldn't. I'd nearly rather have the ETF. Anyhow, the whole debate between cold storage and ETFs will go on, will rage on. But one thing I'm very proud of you for saying is you said here, I don't trust myself with a cold wallet. Well, you know what? Either do I. I can't imagine imagine having $1 million and a little USB key. That would freak me out, ladies and gentlemen. And I've been very clear and open about that from the very beginning. Not that I am an idiot, but I could come off my bicycle and smash my head and that's it. Money lost. That's the concern that I have. Anyhow, Thank you so much for the question. Next question is from Foss Holder. Reminds me of Greg Foss. I wonder, are you related? Anyhow, thank you for all you do. I've been following you since 2021. And of course, hindsight is 2020. My question is, if you look back at your videos from the cycle top in 2021, is there one or more clues or indicators from that time in retrospect did signal a top? And how might this guide us to a potential top in 2025? Well, just for the record, I just started making videos in 2021, and I've been in Bitcoin for a long time, but what I was not aware of was how shady and manipulated the cycle was. Okay, coming from TradFi, I had probably too much trust in all the shenanigans, all the players that were there when they were all a bunch of poopsters, very bad, evil people. I have stronger words, but it's a kid show, so I won't say them on this Father's Day. But one thing about me is I do not like making the same mistake twice. Okay, I will literally whip myself raw. You know, the thing they do to punish myself for missing a top and making a mistake. And therefore, we, together with the development team here, we put a lot of money into building a whole bunch of tools that would make sure we do not make the same mistake again. Let me walk you through a couple of them just to give you some ideas. First of all, we built the top and bottom indicator for Bitcoin, which is built off about 22 on-chain indicators. Right now, we're orange. It's peaked down. When we get to dark orange, be careful. Start taking some profits. When we get to red, eject your belt, hedge like hell, or whatever, reduce your position. I never recommend selling all of your Bitcoin again, and it'll be even hard for me to sell some, but who knows? Anyway, we'll see when the time comes. I think we still have a little ways to go in this market right now. But again, this will identify when we start getting overheated. Right now, we're orange. We're kind of just above middle of the road, despite the price of Bitcoin being over $105,000. We also built the LILO model. The LILO model is what we use to identify how high things can go, layers, etc. And per this, there is, again, that 5% chance we could hit 158, 160K this year, but it's a 5% chance. And when you do mathematics, you don't want to wait for that 5% chance. That's too risky. So we built the LILO model on top of the top and bottom indicator. We also built the ATR model. Again, it looks at the history of the asset, how it runs in bull markets. Very clear from this chart. You can see blue is bull, orange is bear. That's it. That's all you need. If you have one chart in Bitcoin, this is it. This is it. It will turn orange. I don't know if that's going to do that in 130 days or never. We don't know. We'll talk more in a few minutes as to how the price of Bitcoin could keep on going up from one player, but that's a separate issue. Right now, we're still looking strong on the ATR model. We're just off the highs, nearly $112,000. Bitcoin price about just shy of 106,000 as we speak. That's the other tool. Again, layer in, layer out. Absolute key to investing success. And finally, we built the profit taking model for people that don't have the ability to pull triggers and sell or know when to layer out, layer in. Then we have this. You configure it based on exactly how much you want to retain, what your risk tolerance is, how bullish you are on the asset, and it'll tell you, it'll optimize the layers at which and how much you actually sell to get out and take profit. And the amazing thing about this is when you crunch the numbers in profit taking, imagine you plan to sell 100% of your bag of an asset, okay? And you start layering out at, say, level 5 or level 6 with different allocations. The amount that you leave on the table is actually very little at the end of the day, even if the price went to 160,000. Okay, if you start layering out, you don't leave a lot of money on the table. But the danger is, historically, if you hold the bag and then you hold that bag through a bear market, that can be very painful. As we saw last time, we went from 69,000 down to 15,500. And a lot of people held. So these are the lessons that we learned and the tools that we built to make sure we have the risk tolerance. And there's another angle to this as well. It's not just taking profit and moving to cash, but taking money out of what is becoming a jaded, tired horse that is close to the top and rotating that money into something that's about to explode over the next 2 or 3 years. That's the big overarching 30,000-foot strategy that we employ here. Thanks for the question. Alpha Hunter, happy Father's Day. You have stated that MicroStrategy will go after the $300 trillion bond fixed income market. In a recent interview, Saylor said his preferred stock pays 400 basis points more than comparable corporate preferred. Is the next step to get MicroStrategy rated by agencies to get a AAA status, given their 5 to 6 asset to debt collateralized position? And if yes, is this the infinite money glitch you have described to your community? This is one of the infinite money glitches. Yeah, it's the latest. And then MicroStrategy AAA rated, market over subscription for MicroStrategy preferred, buy Bitcoin with no common dilution, Bitcoin price increases, maintain, grow over collateralized position with increased Bitcoin assets, rinse, repeat. I appreciate your insights into Saylor's attack vector for the fixed income market. And I want to congratulate you, Alpha Hunter. This is one of the best formulated questions I've ever seen in the history of doing these questions on Patreon for 4.5 years now. Well done. Brilliant question. And I like brilliant questions. And I want to say big shout out to Sean D, TND Tesla, K8, Rusty Bot, and everybody here in the chat. Thank you for keeping us all safe. First of all, you mentioned attack vectors. Let's talk about these for a second. He is now issuing high yield securities that offer 8%, 10%, which is, again, 400 basis points, which is 4% more than what you can get in other places, with something that is a lot less risky, which is bonkers. But what he can do is, instead of taking debt and funding debt and everything else, he can pivot that money that he brings in into a very hard asset that's only going to go up over time. It's, again, yet another infinite money glitch, like we used to talk about years ago, of issuing stock at a premium to buy Bitcoin, self-fulfilling prophecy, etc. But this preferred stock and convertible bonds with the attractive terms are a no-brainer for many. A lot of people that sometimes have a lot of money, they're very happy with 8 to 10%. I personally wouldn't get out of bed if I don't make 40 to 50%, to be honest. But that's just me. I do this for sport. I don't do this for the money. But that's the first part. Then leveraging Bitcoin's volatility. As price appreciation increases, so does the value of strategy, which supports further issuance, as we've seen since August 2020. Also, the self-reinforcing loop. Again, Bitcoin's price rises, like you mentioned, strategy asset values grows, enabling more capital raises to buy more Bitcoin, which further drives stock and bond valuations. All sounds very easy. Is this another infinite money glitch? Hell, yes, it is. Again, they issue securities, not just ATM, but also convertible bonds, and now 3 different flavors of preferred stock at a premium to its Bitcoin NAV. And they use these proceeds to buy more Bitcoin, and the benefits from Bitcoin price increases boost NAV and the stock price. Again, repeating the cycle. Issue more securities at a higher premium. Boom. And the other thing is, likelihood of AAA rating? No. This will not happen because rating agencies are very slow to understand both new things and even very old things. Like, for example, Moody's just downgraded the US debt. It's clear that if the US was a company, it would have been shot a long time ago, out of business, bankrupt. But they just say, oh, well, time for a downgrade. It's just very Captain Obvious thing. So forget the rating agencies, forget AAA rating. But if you are an insurance company and you need to generate alpha, and you're in a situation where you take in premium to pay your claims, and all of a sudden you see a big rise in claims, maybe from, I don't know, civil unrest, and a lot of damage is being done, and you need to grow that premium base you have faster to pay out more claims. One of the options is, of course, one of the Fidelity or the MicroStrategy tools, which is what many people do. Now, I'm spending a bit of time on this because it's very, very important for people to wrap their heads around. This is somebody that knows fixed income cold, ladies and gentlemen. His name is Mr. Jeffrey Gundlach. Okay. He is the CEO and CIO of Double Line Capital. And he just issued a warning this week that carried a huge amount of weight. He basically said America's debt burden and interest expense have become untenable, and that long-term treasury bonds are no longer risk-free. I'll repeat that. What was considered the most risk-free asset on the planet, long-term treasury bonds, are no longer risk-free. Okay? All right. So now we have a situation where we got this new player in town called Michael Saylor with his 8 to 10% treasuries against a hard asset that are only going to go up over time. Jeffrey Gundlach will probably tell you, yeah, these MicroStrategy preferred assets are less risk than long-term treasury bonds that pay maybe 4% when Saylor pays 2.5 times that. Okay? No brainer. But given his expertise and track record in this field, this warning should be taken very seriously as a signal to investors and policymakers to reassess the safety and value of the treasury bonds. Now, the other big question is, where does that $320 trillion go to find a home? Boom, enter Michael Saylor once again. And here we are. This is basically what's happening. You have Michael Saylor, and he's just tiptoed into the whole space. But every time he issues a new preferred, it's oversubscribed. And they're even trading at higher than issuance price right now. And we have $318 trillion in this bonds. Much of that could float over to Michael Saylor's world and get a much higher return. Again, these companies, like insurance companies and life insurance companies and banks, etc., they can't play with risky stuff. But they're very happy with a 4% return on investment in a year. Can you imagine how happy they are with 8 or 10% when the risk is actually less than a long-term treasury bond, when we know fiat is going to zero, when we know these things are backed by Bitcoin? That is the power he has. Okay, absolutely mind-blowing. An exciting time to be part of it. But there is a risk. I have to point out the risk as well. Hi, Tchaikovsky. Thank you for coming. There is a risk. And in fact, Michael Saylor acknowledged this himself in May last month at a Fortune interview. He said, if we had a prolonged 90% Bitcoin price drop, if Bitcoin went to 10 grand, that would erode Strategy's collateral, potentially forcing asset sales or equity issuance at unfavorable terms. That is the danger. Not that we wiped out, but it would definitely hurt. The question is Bitcoin going to 10 grand? The answer is nope. Highly, highly unlikely. And if it is, we'll all probably be cavemen sitting around the campfire out in the wilderness because everything else will be destroyed too. So hope that answers your question. It's exciting time. And yes, it is another infinite money glitch, and it's all too powerful. Remember nothing else but this chart today. Okay. Bitcoin's 2 trillion, bonds 320 trillion. Okay. Bitcoin is a tiny speck of dust compared to these puppies. And these puppies are defunct right now. Defunct, ladies and gentlemen. Let's move on to the next question. Next one is from Argo. Hey, James, thank you for all you've done over the years. Always my pleasure. Curious about all the MicroStrategy insider selling and if the news was overblown or not, in your professional opinion. This is from Bitcoinist. Strategy's inner circle is selling. A storm warning for stockholders. Just remember, everybody. Hey, Rustybot, thank you up there, Norway. Just remember, media is designed to scare you. Okay? Let's look at some data. First of all, here are the insider sellers over the last few months. Carl Rickardson sold 370 grand. Jared Patton, 294 grand. Andrew Kang, 1.4 million. Carl Rickardson, 653. This guy, Carl, he's been selling quite a bit. But remember, it's not much compared to what their holdings are. And that's over a long period of time. If you give people stock, okay, very important to know this. If you give people stock and they have to, within a certain time frame, execute their stock options, they incur taxes and they have to sell part of their stock to pay taxes. You got board members of Tesla that have this exact same predicament, okay? If you're given, say, 10 million in stock and you convert your options and you're in a high tax regime that pays 40%, you're on the hook to pay $4 million bucks. How are you going to do that? Well, you got to sell some stock to pay that big, hefty tax bill. We've all been there, and that's just how the world works. And in the greater scheme of things, Just to give you a visual of how much was actually sold, not a lot of stock. 2,380 shares. That would be considered a small bag here in the community. 5,700 shares, 4,907 shares. Again, nothing burger. But when you read these alarmist articles, they're just there to scare the heck out of you. Fear sells. When you have that grabbing title, you think the world's going to end. And what are you going to do? You're going to read the article. Okay? So, yeah. Ricketson, yeah, he's selling. But sometimes people need, I don't know, need to buy a big house or a big yacht or whatever else. Or maybe they want to rotate into another asset. Who knows? Diversify. You can't have all your eggs in one basket. Even though I've got very concentrated eggs in concentrated baskets, I'm probably the exception to the rule. But anyway, so don't worry about that stuff. Next question is from Wide Swing Trader. Regarding the pending AI revolution, Eric Schmidt, former CEO of Google, recently said that the US needs 90 gigawatts of energy to meet the anticipated AI growth and demand and expansion of data centers. What are your thoughts on energy and data stock companies that would anticipate where this puck is going? Great question. So, this is just to put things in perspective. A lot of people are so fearful. It's like, oh, we're all going to lose electricity because AI is going to eat it all. Well, we heard that for years and years about Bitcoin mining. Bitcoin mining is going to boil the oceans, all that FUD. It's funny how that story that was around for 8 years of FUD spread by all the people that I've mentioned here on this channel. I won't drop any names. It's disappeared. What happened to all that fear, uncertainty, and doubt about Bitcoin boiling the oceans? Gone. Because it'll boil the oceans a lot faster, if that was even possible, which is not, is AI. Okay. Now, additional required capacity is 90 gigawatts. The current US generation capacity is about 1,200 gigawatts. So they need to create another 7.5% of electricity. Okay, which is a lot. All right. That's like turning on another 7.5% of homes and offices, etc., across the country overnight. It is a lot, no doubt about that. And the percentage of average annual generation capacity, again, a big chunk. But the thing is, one thing people have to understand about humans is they adapt. And if all of a sudden you find you need more food, you'll figure out a way to get more food. If you find humans have a need to get more electricity, they'll figure out how to get more electricity. Now, Tesla, you answered which stock is the best energy play. This one is by far. This is, a shout out to Joe Tegmeyer, a picture of just some of the transformers that they've been buying. Okay, they are stockpiling transformers. Okay, why? What even is a transformer? Well, these things connect Tesla megapacks to the grid, ensuring stored energy is delivered at the correct voltage and frequency, etc., etc. Like there's many projects here in California that use transformers to link 256 megapacks or more to the 115 kilovolt transmission system, okay, which can go up to 730 megawatt hours during peak demand. The problem is, okay, the system is built for peak demand, okay? If you can smooth out the need of the system, we have far too much electricity because the electricity is wasted because you can't store excess electricity. The grid is built for peaks, okay? That's the problem. And that's the problem that Tesla is solving at scale. And that's why the demand for their megapacks is through the roof, everybody. All over UK, the Australians were first to buy all these things en masse, etc. But again, now Elon Musk said, energy is not the limiting factor right now. It is these things called transformers. And who has stockpiled a ton of them? Tesla. Okay. This will ensure they can deploy a lot of megapacks as well, because this is the limiting factor right here. Not the megapacks, not the energy, the ability to store the energy and disperse the energy. Okay. Again, this guy always plays 8 years ahead of where things are actually going to be. Also, we have this thing called a free reactor in the sky. This is solar. When you mention solar in the US to anybody, they go, groan, solar is useless, it's dead, doesn't do anything. Well, look at what the Chinese are doing. Okay, the Chinese know what's up. Okay, they've been planning solar. They create all the solar panels on the planet, pretty much over 90% of them, and they have the biggest solar deployments on the planet, and they generate a ton of solar energy. Whereas nuclear energy in the US is going down, US solar is creeping up, but Chinese solar is going to the moon. Okay, way faster than their nuclear because it's free energy. It's an absolute no-brainer to deploy. And solar is also the fastest growing energy over the past 10 years. And again, a lot of people say, oh, solar will never be able to scale to future needs. That's not true. If you look at the Kardashev scale, which Elon Musk always refers to, solar will be 99% of all power generation on the planet. And the planet is already powered by solar. We wouldn't be here if it wasn't for the sun. Everything on this planet is powered by solar. So there is a way for humans to adapt. Yes, they can get their 90 gigawatt hours. Yes, the technology to play is there. And yes, this is the company that'll pull it off. Okay, that's the easy play. And I wrote a white paper last year of how the megapack business alone should be valued at $1 trillion. And at the time, that was over 2 times the market cap of Tesla. And it's just a little sideline business. So again, it's big. Stay tuned. Don't worry. AI will find the power it needs, and we will not lose our electricity. The product guy, hey, James and IA team, I just got your rotation model and are really excited for future trades. I am somewhat a novice in trading and technical analysis, although I've been investing for years. So what fundamentals do you think I should get more comfortable with to make the most of this model, e.g. chart patterns, understanding RSI, correlation analysis, etc.? This is a couple of elements here, real simple. Think about it as the right fuel selection. I always talk about it's like flying a 747, which you need winning assets, okay, that are very volatile. So pick things that will go up over the next 2 years. All right. After watching things that have gone up like mad over the last 2 years, are they going to continue? Odds are no, but you need to play where the puck is going to be, just like we said in the previous question. So important, everybody. Okay. And we know what these assets are. That's how I am positioning myself. That's how I am rotating. Okay. Also, make sure the 5 assets you pick are uncorrelated. And that is the key. And avoid dogs. I love dogs, but avoid poor performers. Okay. Like, for example, well, you know the ones that I talk about. You don't want Apple in this unless you're going short Apple. Then you could include it, but that's anyway, separate issue. And also use price prediction models. Anticipate what the price could be. So, for example, Tesla could be $600 in a year, and in 2 years it could be $850. Put that into the model. Same thing for other assets, but be careful adding assets after a rampage. Things like the CYFRF, etc., have gone up 2,000%. They're not going to go up another 2,000%. So find another horse that is yet to run. That is probably the most important thing. And use your uncorrelated assets. Make sure you know what correlation is. And that's it. You're good to go. Next question from, I can't see it. The thing is blocking. Is it from A? I got to read this name carefully. Hold on. From JB. Sorry. Nope, that's not JB. Somehow it's blocked. I can't see it. Yeah. Okay. JB. It is JB. Oh my goodness. Okay. I can see it after all. Hi, James. First of all, thank you for everything you shared. Learned a ton from your insights. My pleasure. You've mentioned aiming for 50% Tesla a few times, and I'm trying to figure out how to accurately measure my allocation when options are part of the position. For example, 1 Bitcoin worth 100K, 100 Tesla shares worth 30K, 1 Tesla Leap, 230 strike, expiring December 2027. Nice choice, by the way. I've got some of those, I think. Paid 15K, Delta 0.8, and 1 Tesla synthetic long, strike 300, December 2027, paid 2.5K, Delta approximately 1. And the possible approaches. I'll just walk you through my approach. We don't need to bore the people, but you're dead right there. So first of all, again, like I mentioned before, you got to play where the puck is going to be. So you do have your 30K of Tesla shares. Your leap at a 0.8 delta is worth about 24K. Synthetic long is worth about 30K. So your total Tesla bag's 84K. And with 100K in Bitcoin, you're about 45.7 Tesla. Dead right. But what I would do is think about what the allocation would be if this happens. If Tesla goes back to all-time high, which I think it very will very shortly, and Bitcoin goes to 120K, then you have to think about when you have your allocation. Say, for example, I'm 30% Tesla now, and all of the rest of my portfolio stays flat. But if Tesla goes back to all-time highs, which I know it will, what does that do to the allocations? That's the number I always look at. So that's how I want you to think about this. So in that case, your Tesla shares become 48,900. Your leap becomes 39,120. Your synthetic long is 48,900. Very nice. Your total exposure now is 136,920. Now, I added a little bit to the Bitcoin price. Bitcoin goes to 120K. If Tesla goes back to all-time high, that means your portfolio allocation would be above 50% Tesla. You'd now be at 53.3%. Your total bag would be $256,920. So thank you for the question. I love these questions. They're so fun because that's exactly the way you need to think. Not just what you have today, but where you're going in the future too. Now, you had another brilliant question. I just realized I've never answered two questions from the same person at the same time. But sometimes we pull the questions because they're so important. So JB, you ask good questions too, just like our previous fellow too. So we like good questions. I have two kids, a senior in college and a senior in high school in the US. I used to think it was good enough to consider STEM or healthcare related careers to ensure some level of income and success. Not sure now. Can you offer any advice or frameworks for those entering the workforce in the next few years? How to think about developing the right talent stack and how to invest in themselves and to be ready for what comes next. I think you can offer a wise perspective on this, all that you can study in your awareness on macro trends. Yeah, and the answer to this is actually super simple. And if you've been in the community for a while, you know this answer, but I'll share it again. One, this is what people do not do, which drives me bonkers. Bonkers. It's very important to identify natural aptitudes, okay? What are you good at? Are you a world-class gymnast or a mathematical wizard or an artist or a brilliantly skilled carpenter or problem solver or whatever else? But identify what, and this goes for not only the kids, but also you yourself. And it's never too late to pivot in a career, even if you're 50 years of age, okay? Remember that too. What is your mind wired to excel in? That is so critical. Number one, people don't do this. People sometimes fall into jobs that they're not a good fit for. Like I've seen people in HR departments that they shouldn't even be dog walkers, to be honest. But anyway, I'm not going to go down that rat hole. Then you pinpoint passions, okay? Find out what truly interests you and excites you. Because when you love what you do, you will never work a day in your life, okay? Number one and number two are absolutely critical, okay? If you hate what you do, you're going to be terrible at what you do, and you're going to wake up every morning hating your life, okay? Drop a comment below if anybody is stuck in a job like this, where it's not your passion, okay? Even if you earn less money, but you're doing a job that is your passion, I guarantee you over the medium term, you'll end up earning more money in that because you love what you do. And when you love what you do and you're good at what you do, boom, game over. And odds are as well, oftentimes your natural aptitude fits your passion. Nobody takes the time to understand what their natural aptitude is. They can go through their entire lives not knowing, okay? And then third, develop and refine skills that align with both your strengths and your interests. It's that simple. That's your entire, what's called guidance counselor. Yeah, I think these are guidance counselors in school. That's their job, which anyway, yeah, set them up somewhere, identify what the kids are good at, what you're good at, what their passion is, match them between. And you can actually do that very easily with AI too as well today. Now, there are two hot areas right now. You nailed kind of one of them, medical and healthcare. There is a aging population, chronic care needs, a lot of new tech innovation too, and lots of opportunities around telehealth and nursing and elder care and informatics. That's going to be a great place. Again, if your kids are interested in medical, healthcare, tons of opportunity there. One I did mention before, and it's funny because I was talking about it last night on a boat, is energy storage and solar. All right. There is absolutely off the hook demand for energy storage installations, smart home energy solutions, battery storage solutions. Electricity is only going to get more and more expensive with AI. People need to be self-sufficient. They need their own solar. They need their own battery storage. If that is of interest, if you have somebody who is technically minded, engineering minded, is willing to get up on a roof, maybe, I don't know, they can make an absolute fortune doing this. Okay. I know of one such implementation happening right now for an extremely high net worth individual. They don't care what it costs, but they want to be completely independent and off grid, okay, with all the power they need for a lot of servers. And that's just an individual. So again, two hot areas. I could give up 1,000s more, but we don't have time, but I can do more of this every week. And I love this question because it's so important for our kids to be successful in the future. And final part of the show, helping animals. We supported Naberta, who lost an eye and had her knees repaired. And she loves to smell the roses like we all do. We need to spend more time smelling the roses. Tomorrow, DCA Live, 7:30 a.m. With, of course, our friend CTO, Mando, and Marty. And there's a lot of new stuff to talk about as well happening out there in the world. So don't forget, thank you for coming. I'm going to do some live questions now. I'm not wrapping up, but hopefully you were able to amplify your intelligence a little bit. This one's about empowering future moves, not only in your portfolio, but in your careers too. So I tried to think up that little concept. Anyway, thank you once again to the mods in the chat for being here. Let's get to some questions. DBF 430, thank you so much down there in Australia. Thank you for being here. Next question is from, let me see, Doc Intern. As Strife ATM grows, wow, we just talked about that. Part of the dollars raised will pay the coupon on pre-issued bonds. Over time, can the coupon dollar amount grow so large that it becomes difficult to buy Bitcoin efficiently with the dollars raised by the bond ATM? Interesting. I think that risk is a long way off. In fact, they can issue a tiny amount of shares to cover the amount of coupon required for these things. They can also issue more Stride and Strife or even STRK to pay that. They have so many options as to what they can issue to pay the coupon on their bonds. But I don't think it'll ever get so big. One of the good things Saylor is very good at is managing risk and controlling exactly how much he has like debt. He won't let debt go above 20%. It's currently around 10% now or so. And he will, if the NAV premium on the stock is really high, then he'll issue ATM. If it's not, then he'll go preferred, etc. But again, it's still so small. And remember, as the assets grow, everything else grows. So I'm not concerned about that at all. But it's good that you were thinking that way. Paul Poco. Rotation model, 1 day MicroStrategy, last 15-minute or wait to close? Paul, hit me up in Discord on that one. I'll answer it. It's more of a technical question, and I want to make sure you have the right settings in your trading view before you pull that trigger. Doug 1, any thoughts on OSOL trading below NAV? Better to stick to pure form with a little dabbling in Sol treasuries? Yeah, so one of the things that happens, this is a great question, Dog 1. It's just like crypto. When you have lots of different flavors of the same type of thing going after a limited amount of cash, things kind of run out of flavor, and people want to go for the volatility. Remember, volatility is vitality. You see all the CYFRFs and the DFDVs, which I'm in both. I trade both. as you've seen. They grabbed the momentum. And even though their NAV premium is far higher than something like OSOL, it's not where the action is. Go where the action is. Go where the volume is. And people in the crypto space, especially the crypto treasury space, very few of them actually do NAV premium calculations. They just follow the momentum. And this is just a classic example of momentum following. So yeah, pure form always, and dabble with the treasuries, okay, is what I would do. And in fact, I did see there was a big move in one of those things today. Yeah, Solana's up 5.5% today, up $8. So that's good news. Rusty Bot, thank you so much. What's in the box? The answer is bonkers content. Thank you, Rusty Bot, for being part of the family for a long time out there in Norway. Anglo Blackson, cheers to all the fathers out there winning and investing. Thank you so much, buddy. And thank you for your super sticker. And thank you once again to Sean D, K8, TD Tesla, and to Sylvan Muster, Adam Q, Tchaikovsky 7, Wildcat Mahoney, Signal 103, and Beardy A is here. Hey, Beardy. Hope all is good with you. Did I see? I thought I saw Des back again. Des in Namibia. Amazing. I didn't see him. It was a hallucination. Too much screen time. Thank you all for coming. Thank you to the mods. I hope I got all the questions. Have a good night. See you tomorrow morning, DCA Live. Bye. Don't forget, happy Father's Day, everybody.